COVID took a big bite out of the restaurant industry, with several 100,000 restaurants actually closing their doors and never opening again. But many have learned from the pandemic and are surviving and are even thriving. Of course, on top of it all, inflation has now settled in. On top of that, a labor shortage. So how do you navigate it? Kevin Bazner is the CEO of A&W Restaurants, and it's nearly 1,000 locations around the world. Good to see you, Kevin. Happy Friday to you. How have you learned? How have you thrived throughout the pandemic?
Wow. Well, where do I start? Yeah, just like every other industry and consumer, there's a lot of volatility out there, a lot of uncertainty out there. And, we're in, a COVID year 3. So, but to answer your question, we've done extremely well, starting about late April of 2020, as we came out of, people started to come out of their lockdown, and the drive-throughs for us have been king. Supplement that with, delivery and a lot of online ordering. And we've learned a lot from that. Certainly, now we've got more and more consumers out in dining rooms and more competition, even though we've lost a lot of restaurants. A lot of restaurants have reopened that were more of a dine-in capacity. And what we see is a lot of consumers visiting our dining rooms and other dining rooms. So we've had 2 very, very strong years. So like the industry, we flattened out in Q1. Some of that's weather, some of that is the economic conditions, but all the things that you pointed out in previous segments, inflation, labor, continue to be challenges for us, and so still a lot of uncertainty out there.
Well, Kevin, let's dive a little bit deeper into that labor picture. I'm wondering, what have trends been like at your restaurants? Have you been having concerns when it comes to staffing, and where are you seeing the most concerns on that front?
Well, yeah, we still have labor concerns. It's a tight labor market. We've learned an awful lot over the last 2 years, certainly in the last 12 months. We think we have the majority of our labor challenges behind us, and it's really been through a combination of things. One is higher wages. There's no question about it. Our wages are up 15 to 20% than from where they were pre-pandemic, if you may, for sure. And technology, self-ordering, et cetera, is helping us with productivity from fewer employees. And we're just learning to operate as we have in the past, learning to operate with fewer employees. And the good news is the last 2 years, and one of the learnings is, and for us, not the industry, is just a greater adaptation of some of the consumer technology is just accelerated. Probably gotten 10 years of acceleration over the last 2 years. So really just like others, just figuring out what works best for us and putting that into play to offset the higher cost of labor. We're not quite there yet. We're starting to see a leveling in. Our operators, we're mostly a franchise operated business, have been figuring it out. And we tend to do business in a lot of smaller rural communities where the labor challenges are just a little bit less intense than perhaps more urban areas. But no question about it, it's a day-to-day thing that we have to do.
Kevin, sounds like you've come out of this leaner and smarter. Let's talk about the inflation issue. Some rough numbers earlier this week. How do you balance the desire to, you talk about the communities you're in, you can't raise prices that much in those types of communities. So how do you balance the desire to pass on some of the cost to the consumer, or how much do you eat as the consumer, as the restaurant chain?
Well, that's part of the volatility and the uncertainty. We're figuring it out. Average check in our category, and we're right there with it, has gone up, 7% in the last each of the last 2 years, unprecedented in the history. Having said that, commodity prices and what it's hitting our basket of goods in the mid-teens, as most QSR operators. So there is a gap there. There's no question about it. We haven't quite passed along all prices. This is certainly not transitionary as perhaps thought 6 months ago, but some of it is. It's when will it level out? And that's what we're looking at in this year 3 of COVID is, where does that level off? So we want to be mindful. We're watching transactions. We're eating a little bit on margin points right now. And, we're trying to figure out the best way to get it through productivity and really menu positioning and menu engineering as much as pricing as well. So
And Kevin, of course, the company has changed quite a bit over the years, but A&W is over 100 years old, so it's weathered quite a few market cycles. As we have a number of economists, strategists talking about a potential recession, how has A&W typically performed during downturns, and do you expect this time to be the same?
I do, actually. Yeah, we have 102 years of history. We're one of the few, really the only chain that's lived through a pandemic before, back in 100 years ago. But we've experienced a lot. Our operators have experienced a lot. And recessionary, we have challenges with consumer behavior, but we also get trade down in a recession, from casual dining, from family dining, et cetera. So we generally, during recession, well is relative, well is compared to the industry. And if we can hold our own, if you may, we feel good about that. And we think we're well positioned for that. We still think, we believe we still have room for price, but we're being cautious and watching the commodities markets in particular. And once those settle down, we think we can get a better handle on it. But hopefully the R word won't come to fruition, but we're ready for it. And we've lived through this before, and we'll get through this one. There's no question about it.
Kevin, next time you're here, it is a Friday. We're rolling some video that shows the root beer float. I mean, you got to hook us up next time, because there's not much in the world I love more than a nice cold root beer float. So next time you got to make me that promise. But how much is telling your story? And I've read some of your comments about the success of the chain. How much is telling your story part of the future?
Well, it's a big part of the future, and it's been a big part of how we've been able to take advantage over the last 2 years with the pandemic. I mean, we are a 102-year young brand. We are in a growth mode right now. We've got a lot of new development going on in the chain. We will globally, we will probably open somewhere 75, 80 restaurants between now and the end of next year. We feel good about that. About a third of that is domestic. And it's really telling our story during times of crisis. And clearly for consumers, it's been a crisis the last couple of years and continues to be in many respects. Consumers tend to gravitate towards comfort brands, and we are certainly one of those comfort brands. That made fresh root beer, which is the same recipe for over 100 years, and in that frosted glass mug. I mean, it's iconic to the consumer, and it's a comfort level, and we've been experiencing that, and we are certainly working on continuing to capture that. And I will definitely take you up on the root beer float promise next time around. We'll figure out a way to get it to you, because it's 80 plus degrees here in Lexington, Kentucky, and it's a perfect day for root beer float. And seasonality, we're really excited. We're going into our peak season. First quarter weather was versus prior years was not kind to us. A lot of rain in our markets, a lot of cold weather, but we're out of that now. We're looking forward to it, and it's never a bad day to have a root beer float. That's for sure.
Certainly not.
Right.
I'm with Dave on that one. Would love to get a root beer float. Kevin Bazner, A&W Restaurants CEO, thank you so much for your time this afternoon.
Thanks, guys. Appreciate it.